Did the IRS just reject your payment plan? This happens more often than you think. And if you don't respond correctly, the IRS can move forward with wage garnishments and bank levies. In this video, I'll show you exactly why payment plans get rejected, what your options are when this happens, and the step-by-step process to get back on track. Hi, I'm Pietro Camestrelli. I used to work as an IRS attorney in Washington, D.C. So I've seen firsthand how the IRS operates. If you're dealing with tax issues and need guidance from someone who understands the system, give me a call at 951-319-7674 for a free consultation. First, let's talk about the most common reasons the IRS rejects payment plans. Reason number one, missing or incomplete financial information. The IRS requires you to submit a Form 433-F, which is the collection information statement. This form asks for detailed information about your income, expenses, assets, and debts. If any section is left blank or incomplete, the IRS will reject your application. They also require supporting documents like bank statements, pay stubs, and proof of expenses. Without these documents, your application won't be processed. Reason number two, you can afford to pay in full. The IRS calculates your ability to pay based on your income minus allowable living expenses. These allowable expenses are based on IRS national standards, which set specific amounts for housing, food, transportation, and other necessary costs. If your calculation shows you have enough money left over each month to pay your tax debt in full within the collection period, they will reject an installment payment plan. Reason number three, you have unfiled tax returns. The IRS requires all tax returns to be filed before they will approve a payment plan. Even if you're only missing 1 year, it can trigger an automatic rejection. This is a compliance requirement, and you must be current with all filing obligations. Reason number four, you propose too low of a payment. The IRS has minimum payment requirements based on your total tax debt. Your proposed payment must show that the entire debt will be paid within the collection statute expiration date, which is typically 10 years from the date of assessment. If your payment amount won't satisfy the debt within that framework, the IRS may reject the plan. Understanding why your plan is rejected is the first step in fixing the problem. So here's what happens once the IRS rejects your payment plan. The IRS will send you a rejection letter explaining the specific reasons for denial. This letter also includes information about your appeals rights. You typically have 30 days from the date of the letter to file an appeal. If you don't take action within that 30-day window, the IRS can resume collection action. That means they can proceed with wage garnishments, bank levies, or federal tax liens. The 30-day window is critical because missing it means the IRS can move forward with enforcement. Now you have 4 specific options when your payment plan gets rejected. Option number 1, file an appeal. You can appeal the rejection through the collections appeals program, also called CAP. To do this, you need to submit a Form 9423, which is the collections appeals request. This form must be filed within 30 days of receiving the rejection notice. When you file an appeal, an appeals officer who wasn't involved in the original decision will review your case independently. Option 2, resubmit with corrected information. If your plan was rejected because of missing documentation or incomplete information, you can resubmit your application. Provide the complete financial information the IRS requested. Include all required supporting documents like bank statements, pay stubs, and expense receipts. This option doesn't require a formal appeal. You're simply completing what was missing the first time. Option 3, propose an alternative payment plan. If the IRS rejected your plan because your proposed payments were too low, you can recalculate and propose a higher payment amount based on IRS standards. You might also consider requesting a partial payment installment agreement where you make monthly payments but won't pay the full balance before the collection statute expires. Another option is to evaluate whether you qualify for an offer in compromise, which allows you to settle your tax debt for less than the full amount owed. Option number 4, request currently not collectible status. If you truly cannot afford to make any payment right now, you can request currently not collectible status, also known as CNC. This status temporarily stops IRS collection actions. To qualify, you need to prove financial hardship by providing complete documentation of your income and expenses. The IRS will review your financial situation and determine if collection should be temporarily suspended. Each option has specific requirements and deadlines, so choosing the right path matters. Here's exactly what you need to do after receiving a rejection. First, read the rejection letter carefully to identify the specific reasons your plan was denied. The letter will tell you exactly what was missing or why you didn't qualify. Second, gather any missing financial documentation the IRS requested. This might include bank statements, pay stubs, or proof of expenses. Third, calculate whether you can increase your proposed payment amount. Use the IRS allowable expense standards to see what payment you can realistically offer. Fourth, if you're appealing the decision, file Form 9423 within 30 days of the rejection date. Don't wait until the last day because you need time to complete the form properly. Fifth, continue making voluntary payments if possible. Even if your plan was rejected, making payments towards your balance will reduce the amount of penalties and interest that continue to accrue. Taking these steps quickly can prevent the IRS from moving to enforce collection. If your IRS payment plan was rejected, call us at 951-319-7674 for a free consultation. As a former IRS attorney, I know that exact documentation and procedures needed to get payment plans approved. Now, sometimes the IRS invites you for an interview to fix your tax situation. That can be nerve-wracking. Watch the next video where I'll show you what to do and how to prepare properly.